Hello and welcome to Commodity Champions. I'm Manisha Gupta and today we focus on the world's most commonly eaten staple, that is wheat. Prices are at boiling point in the grain space as macro factors have begun to choke supply in the face of rising demand. Russia's withdrawal from the Black Sea grain deal is the biggest of these macro changes as a pathway for 9.5 million tons of grains exported from July is no longer safe. Remember, following its invasion of Ukraine, Russia's navy imposed a blockade on Ukraine's Black Sea ports, trapping about 20 million tons of grain. But in July, a deal between Ukraine and Russia was brokered by Turkey and the United Nations, agreeing to resume grain exports through the Black Sea ports. However, President Putin said that the deal was being suspended, citing a massive drone attack through a safety corridor in the Black Sea that alleged Kyiv was responsible for. This move effectively risks wheat supply from the world's breadbasket, which has inevitably sent prices soaring world over. Things are equally unstable back home in India, where March's heat wave sent prices 30% higher, with experts expecting 3 to 5% of a rise to follow from here too. So what lies in store for the grain space, and can the government help soften prices? To take this discussion forward, I am now joined by Carlos Mera, who is Senior Commodity Analyst at Rabobank, and Sumit Gupta, who is CEO of McDonald Pells Global Commodities. We also are joined by Ajay Goyal, who is from Shivaji Roller Flour Mills. Gentlemen, hi, thank you so much for joining us. And it really is about the latest trigger coming in from Russia, which has withdrawn from the Black Sea Pact. How do you see, Carlos, it impacting the markets? We have seen a knee-jerk reaction, yes, but following that, where do you see the markets headed now?
Well, we saw the 5% increase in the market yesterday. To be honest, I think that was a relatively measured market reaction. And we have to understand that, yes, we were expecting this deal to come to the end, but it was only expected to last for another 3 weeks and a little bit more. So there was already an expectation in the market that this deal was going to be cancelled. That's why the market reaction following the cancellation was not that sharp. Going forward, we do expect to see increasing exports out of Russia. Russia has had a massive crop in this season, so it could, export increasing volumes. We were disappointing with the Russian exports in the last 3 months, but actually in October, exports started to go up out of Russia. And in Ukraine, where we will expect to see more exports out of the ports on the Danube, which are almost immediately EU waters, and also via land towards EU countries. In terms of pricing, I think wheat prices will stay relatively elevated, but I wouldn't expect panic on the back of this cancellation because, as I said, to some extent, it was already expected. Now, looking to the next season, things might look a little bit trickier there because we have quite a bit of the stocking in exporting countries, with the exception of Ukraine and Russia, in the current season. And next season, we may have a big drop in Russia. Russia might not produce another record crop. Therefore, availability will continue to be tight more than 1 year away from now.
All right, so the concerns just about continue. If not for this season, then the next as well. Ajay, what's your sense? How do you look at the overall global trade impact on wheat and other grains as well?
So I think this war effects will continue until there is total peace. We cannot be expecting a total normal resumption, I guess, until there is some resolution to this ongoing crisis. So until then, there will be volatility in the global markets because, most of the wheat is locked in Ukraine and Russia, and there has to be a way out of that wheat peacefully. Until then, the markets are going to witness a huge deal of volatility, in my opinion.
Oh, well, yes. So that's what our experts are telling us, that the uncertainties will continue. Sumit, what's your sense? What is the kind of availability and demand scenario that you guys are working with?
Yeah. Hi, Manisha. First, thank you very much for having me on the show. It's a very important question, as you have highlighted, on the wheat pricing, wheat supply-demand situation at the moment, because we are getting into planting season in Russia, Ukraine, and Europe at the moment. And the way Russian-Ukraine grain deal has been called off, it is going to have a negative impact for the planting for the coming year. which is going to keep prices high for wheat, not only for this year, but for the years to come. Because all the supply-demand imbalances take multiple years to correct. It's not one-year phenomena. That problem comes, you plug in supply, and the problem is solved. No. We are going to have the supply-demand imbalances for years to come. Russia, Ukraine contribute approximately 30% of the total global trade flow. And this trade flow at the moment is impacted. It is raining a lot in Australia. It's not raining in Argentina. So we do have global problem on the wheat supply side at the moment. Demand is quite robust. All the socialist countries specifically are buying a lot more wheat than they normally do because they need security back home. And that is leading to a robust demand. And that is where we have seen prices globally is around 50% higher than same time last year. Last year, FOB was around $240, $245. Equivalent Black Sea, it is approximately $320, $330 FOB equivalent at the moment. And against that, prices in India has increased relatively at a lesser pace. Government of India has done a great job. Thank you.
Clearly. Carlos, how would you look at the prices going forward? I mean, we've seen all-time highs in this year and then, of course, some correction and then a rebound yet again. It's been volatile at best. What is your sense moving forward from here for prices if we were to look at a quarter or a couple of quarters ahead?
Well, I certainly don't expect prices to go back to the record levels. I mean, let's remember that those record levels were reached when the market was fearing that we were going to have sanctions on Russia, and also that Russia could occupy the whole of Ukraine and destroy all of Ukrainian agriculture. Now, that doesn't look to be the case on either side. So I think price will stay well above cost of production. They will probably go back to $9 per bushel, but they expect to be relatively at that level, so well above cost of production in at least the next 12 months. And that's because what I said, we still expect a deficit. We have a deficit this season globally, especially outside of Russia and Ukraine. And next season looks like it's going to be the same case.
All right. Let's also look at the Indian impact from the Black Sea development that we've seen. And Ajay, what's your sense? How do you look at the Indian prices reacting to this, even if it is sentimental?
Yeah, so India is totally insulated from all global things as long as, there's a 40% import duty and there is a ban on exports. So I do not see any, for the next 6 months, at least until the new crop, any major policy reversal by the government. And hence, I do not see anything impacting, any global event per se impacting Indian wheat for the moment, because it's a 5-month play left out for Indian wheat.
Clearly that. Sumit, how would you look at that? Because as Ajay is pointing out, we are totally isolated, insulated from this whole thing because we are neither exporting, that is what the government banned, and imports clearly at 40% of an import duty seem like wouldn't happen really.
Manisha, I will like to correct you. We are neither isolated nor insulated at the moment from the wheat prices, what is happening globally. Because if you look at in the context of what Government of India holds approximately 24 million tons of less wheat this year on 1st of October compared with 1st of October 2021. Government of India holds 4 to 5 million tons of rice equivalent less than same time equivalent last year. So Government of India is having a stock problem at hand. And whenever you have stock problem at hand and you have a population of 1.35 billion people, you cannot say it short. You have to look for the alternate sources to augment supply. And for that, Government of India has a couple of tools. This year, they have given a signal by increasing MSP of wheat and chana by 100 rupees, which is equal. But in percentage term, wheat prices have increased, MSP has been increased significantly higher than chana. So Government of India wants farmer to move towards wheat from chickpeas. Government of India is not going to take any policy action till the time we cross the planting season, because Government of India wants to give the signal to farmer that you are going to get good prices. But do you think, or can we think that Government of India can augment their supplies in the coming years through the procurement? Answer is no, because we have a structural problem on hand. So the question is not when Government of India is going to allow the imports. but it is what quantum is going to come in. And looking at the current situation where there is a tight demand and supply situation across the world, it is paramount for Government of India that sooner they do it, better it is. Because in this kind of situation, if we kick the problem down the road, it only it grows in size. It doesn't solve itself. So being such a big consumer, we have a big problem on hand.
Clearly that. And the other thing really is not just about the wheat, which is of course the golden grain as we call it, but it also is the price rise across value chain as we have seen. So wheat as it is consumed in sense of flour there, but when you look at bread and biscuits and pasta and penne, I mean everything seems to have seen a price rise. Ajay, this question is to you. Have you seen price rise across value chain and by how much?
I think, most, finished product manufacturers like biscuit, pasta, etc., have been holding on to their price rise. And now the festival season is behind us and the real lean season is there and wheat prices have really shot up like anything. So I do think that there will be a real price hike in these products very soon.
All right. So while the Indian festival season may be behind us, but the international festival season really is coming in. And what is going to be the impact of that is what we'll discuss with Carlos. But after this very short break, don't go anywhere. The discussion continues on the other side.